Hi everyone, JR with Secure Metals. May 1st, 2014, 11:48 a.m. Eastern Standard Time, and I have some technical analysis. Here's the gold chart. So the price is currently still flirting with the 50% fib level here at around 1286. This morning we saw a low of 1277. Yesterday they announced the FOMC minutes came and they tapered another 10 billion, and just like I expected, we did see a little bit of a dip in the metals. There hasn't been a sell-off though, which is positive. Also, this is one of my favorite formations, and here it is. Anytime you have a falling wedge, basically this is what it looks like. So you have prices declining, and what you have is you have a big breakout at the bottom of it. So really that's where we are right now. We're falling in this wedge here. Found some support over here. This coincided with the 1277 resistance, your 100-day moving average, as well as on the weekly. I believe you had the 20-day moving average around here. So they both slightly moved up to around, I think last time I did the video they were both at around 1271, 1275. Now you'll find them between 1280 and 1277 at any rate. So this is your daily. So I like this falling wedge, and I like the idea of getting in here. On my last video I also stated that 1260 was going to be a very strong support level. We are still yet to test that level. Currently testing this 1275 zone here, and it has not broken through that level just yet. But again, at this point, I mean, you can also argue that we have a triangle here where the prices are squeezing. If it doesn't fall below 1277, it could also spike from here. It doesn't necessarily have to fall down all the way over here, because we have two formations, right? So we have the first one from here to here and from here to there, and then we also have the wedge from here to here, right? So if this wedge, this triangle plays out here, then we could see this price continue to go down, possibly up, depends on how this triangle works out. And also this wedge, which I'm hoping that that the wedge comes together, because this wedge is a lot stronger than this little triangle here. So the idea would be to find a level of demand here where the buyers are going to come in, and if I'm looking at this chart, I'm looking at the buyers coming in roughly around this level here. So anywhere, just like I did on the previous video where I put this box, this green box here on the silver chart, this is for the gold chart, and this is where this zone here is where I would expect these buyers to come in. Really, roughly right here is where I would like to see the buyers come. Right here in this level here, that's where I would love to see these buyers come in and make this formation and finish off this falling wedge. And again, as you can see here on as you can see here, these wedges, they break out. When they break out, they break out pretty high, and they usually try to test the high here. So if we do break out above this level here, above this line, I do expect the breakout to test at least a 20% fib level here on 1340. But obviously I would expect this to go higher and possibly try to retest this level here at around 1380. But again, we do have to see if this level is going to hold. Stochastics are fairly neutral, pointing sideways right now, but they are looking like they are about to turn around. So we still have further room to go from this 1282 zone where we currently are. Now on the weekly chart, stochastics are getting a bit oversold, and currently testing the 20-day moving average on the weekly chart, still below all the major moving averages. Again, I would like to point out that on gold on the daily chart, again, remember this black line here. Let me clean this up a bit so we can see this a bit clearer. So this black line is your 200-day moving average, a very slow but very strong moving average. And currently it is flat. Last time we saw this flat, we saw a lot of sideways trading, right? So right now it's actually curving. Right now it's pointing to 3 o'clock. That's not too negative. It's not positive either. But in the same respects to what I do like about this is this 50-day moving average. See this blue line here. Okay, this is your 50-day moving average. Anytime your blue line crosses the 200-day moving average, again, like I said last time, this is called the death cross, and it's very positive. If it crosses to the upside, it's positive. If it crosses to the downside, it's very, very, very negative. But in the same respects here, I really like these formations that we have here. So couple that with your moving average, and we have this here, and we also have this wedge here. So again, I wouldn't be surprised if we would test this lower level here on the 1260, 1257 level, okay? And from here, we would like to go up much higher than that. The metal does seem to be a bit oversold here on the weekly chart. On the daily chart, like I said, we still have some room to go down a bit further. Let's look at silver here. Silver, same thing. Silver, like I said on this, I think last time I made this video, I think prices were hovering around the high 19 levels. And since then, I made this zone, and as you can see, every time we hit this zone, we see buyers come in. And that's what we want to see. We want to see the buyers continue to come in. Stochastics are still pointing south, so again, a little bit of room to further down movement. But the metals are, this morning we came down to 278. That was the low for the day so far. And moving up fairly quickly. Right now is back up to 1910. So again, anytime you touch this level here that I've drawn, this is where the level where the buyers are. So again, a great opportunity for you to get in. Any opportunity you get to get into this zone here, put a stop loss here roughly around just below the low being 1814. I would probably set, if we come down here, this is what I would like. I would actually like for this price to come down to around 1850, because again, at that 1850 level, it's a very strong level, and your risk reward is phenomenal. I mean, right now you can place a short-term trade here around 1850. You have about a 50-cent downside move. Again, if the market stops you out and you get locked out of this market because it keeps going down further, not a big deal, because again, anytime you can place a trade where your odds are 4 to 1, 5 to 1, 6 to 1, this is just a great trade if you ask me. So again, on the short term, again, 1855 would be a buy for me, and I would probably put a stop loss around 1790 just to keep it on the safe side, but it shouldn't fall below that area. If it does, then we would expect further moves, possibly down to the low 16 area, probably 15 area. But again, based on current fundamentals, I just don't see why this metal would continue to fall. And I'll visit the Dow Jones here in a minute. I just don't see why the Dow Jones would continue to rally, especially if they announced yesterday they're tapering another 10 billion, right? And we're also testing this long-term trend line here, extending from back here, and you can see here that this is also testing this line. So again, stochastics on the weekly looking positive, looking oversold. And of course, your Bollinger Bands over here are still fairly neutral. They're not expanding to either direction. So the market does look like it's going to continue to trade in a range. If I'm looking at the weekly chart, if I'm looking at the daily chart, again, I can expect a little bit of a further move to the downside. Very limited though. Okay, so 1850, that's my trade idea, short-term trade. Again, you're risking about 50 cents, and you're looking to take this thing up to at least 20 and a half, possibly taking it to 21 and a half, maybe even higher. But again, low risk, high reward. Doesn't get any better than that. And as you can see, the first time of a few days ago, we tested this $19 level. Immediately, we moved to the upside. We did create an outside day. An outside day is when your price goes above and below the previous price. That's not positive. So again, I'm not that surprised that we did see a little bit of a move to the downside. But in the same respects, the outside day or even the inside day, which is the opposite, those are not strong enough technicals for me, at least. I don't really care for those too much, but they are indicators nonetheless. So that's your silver chart. Let's look at the Dow Jones. The Dow Jones, very mixed. Yesterday we didn't see a move to the upside after they made the announcement. We actually saw a little bit of a spike to the upside. We finished off the day, I believe it was at 16,560 or 16,570, and currently again, just prices look a bit confused. We did have a big level of supply here, where again the supply did exceed the demand, and once you see that happening, you see big moves to the downside. Right here, that's another level of supply, where again you just see a lot. Anytime markets hit these levels where you have these huge moves, they're usually good to sell. And as you can see here, we did touch this level here on the 1602 and immediately moved down, and currently I think we're in the process of retrying to test this level here. And again, without the stimulus, I don't see why this would go much higher than this, but in case we do, again, this is your level of supply, so this is where you want to sell. Again, short, and you can put a stop loss at around 16.6.5. So you're risking $50, but again, you're looking to make about $200 or $300. So again, those are those levels where if you get stopped out, it's not a big deal, because you really have to get about 7 of those wrong, 8 of those wrong out of 10 in order for you not to make money. Because anytime you can make a bet, one out of where you're looking to make 3 or 4 versus one that you bet, that's a great bet for me, if you ask me. Okay, so again, good selling point. Again, I don't see the Dow Jones getting any support without the stimulus. We're at $45 billion, and I think they're going to continue to taper until the market really gives us a significant correction. Okay, stochastics on the weekly looking positive. Your 20-day moving average looking very nice. So again, still further room for upside. And my point being that I just don't see this thing having that much legs. I just don't see this thing going up to 18 and a half without any stimulus. I really don't see it. But at this point, again, only time will tell. And I've already shown this chart 1,000 times, this monthly chart, where you have your that really ugly broadening formation right here. So again, lower lows, higher highs. That's not a good formation. So I am expecting, like I said on my previous video, we just haven't had a good correction. This is a 13% correction, 19% correction. This was back in 2011. So 2 really nice corrections, and you usually see them at least once a year or once every other year. But again, for the last 4 years almost, this is 2011, October 2011, we are now at 2 years and 6 months without a significant correction. We did see a little bit of a correction, 5% here, another 7% correction there. I would be very hesitant to get in this market, at least here, unless you're shorting this market. That's just my opinion though. But still room for a little bit of upside, but I think the upside is limited versus the downside. Okay, and that's about it. I have some articles that I want to share with you guys, but I'll do that on the next video. I'll try to get that done today as well, and that's about it, guys. All right, I hope everyone has a great weekend, and I look forward to seeing you guys next week. Bye bye.